This is the third part in the Daily Retest trading strategy video series. In this one we're going to look at trade management. Okay, and we're going to use the same concepts we've used before in terms of supply and demand, and in particular the trade management within this strategy is very similar to the trade management in the first time back, which shouldn't come as too much of a surprise. What we're looking to do with the daily time frame is to find as heavily as discounted entry and stop loss as possible, so we can maximize our risk reward. Okay, it doesn't make sense to base your stop loss on the daily time frame when you can easily zoom in and find the supply and demand that actually caused the breakout. Okay, because that's what should hold on the retest. So that's pretty logical. So there's no sense in looking on the daily time frame to place your entry and stop loss in terms of putting it below bar lows or daily SR. We want to maximize our value and maximize our expectancy by using the knowledge of supply and demand and finding those decision points on lower time frames. So that's all we're doing, zooming in around the SR and seeing if we can find clear reasons, clear supply and demand zones that actually led to the breakout. Okay, so quick momentum moves away from consolidation zones, i.e. supply demand zone, tells us that that's the demand that led to the breakout, and that's the supply and demand that should hold on the breakout. Now, it's not always as clear as that. The ideal situation, and I'm going to go through some examples in a moment, the ideal situation of course is going to be a very clear RBR or DBD at the scene of the daily SR, a nice wide zone, and I'm going to be looking to trade that on the retest much in the same way we trade an RBR or DBD on the normal FTB. Okay, so we're going to zoom into lower time frames, say H1, M15, M30. I'm going to find those zones, and that's going to be the means of placing our entry and stop loss. And then obviously our targets are going to be based on the daily time frame. Okay, but it's not always as clear as that. Okay, so we have to consider each situation on its own merits. Sometimes there won't be a clear supply demand zone, you can't pinpoint it. Sometimes there'll be stacked zones, and sometimes there'll be multiple close SRs which therefore have multiple SD zones, and therefore you have to decide which one should hold, and you basically just have to weigh the setup as a whole. If it's a very clear supply demand, that's pretty straightforward, good setup. If we have stacked demand, then you have to look at it from a volatility perspective as well. You have to consider the fact we are trading the daily time frame, so where should we put our stop loss? Which demand should we put it below? Again, some examples will illustrate this in a moment, but we have to be prudent and logical when it comes to the volatility. We obviously can expect some follow through when we have the retracement, because we are trading the daily time frame, so we can have wicks created on a daily time frame, which could be a deeper test of stacked demand zone, supply demand zone. So if one particular supply demand zone doesn't stand out in terms of it caused a very strong momentum breakout higher on that lower time frame, if we have stacked demand zones, it makes sense to put our stop loss below that overall stacked supply demand, but all the time bearing in mind volatility in terms of we don't want an ultra wide stop loss for the sake of it. Okay, we always have to think in terms of balance of probabilities. There's no point zooming in and having a 100 pip wide stop loss just because it feels safer. Okay, we're always trying to be logical in that respect and think in terms of expectancies and maximizing risk reward. Okay. In terms of finding targets, we are of course not going to be using the lower time frames to find the targets. It's a daily time frame trade, so we're going to be using the daily time frames to find the next supply demand or the next support resistance as our target. Okay, as our FLR, FLS. Now, what determines where our target will be? Well, it's obviously the bigger picture, and things like the strength of the breakout. Okay, if we have a very strong breakout in terms of strong selling, strong buying, that also suggests strong momentum, and the seller's buyers is strongly in control, and therefore it would be logical to conclude that we expect a stronger momentum move. Then a very small breakout, one that doesn't suggest strong selling, buying, especially if it's in a kind of a ranging market, that doesn't suggest a strong trend move. Okay. Whereas a strong trend move with a strong breakout obviously suggests trend continuation. Okay, we can never be 100% sure what's going to happen, where price is going to reach, but we're just trying to consider objective factors that can lead us to making decisions based on probabilities. That's all trading is, and that's all I'm trying to get across here. Other things to consider: location history. If, for example, it's a support resistance zone that's been hit 6 times in fairly quick succession, we have maybe a wedge pattern leading into that support resistance, it's pretty logical to conclude that the breakout is not unexpected, and thus we can foresee that a bigger move might be forthcoming, because it's a breakout of a key SR which has been tested multiple times with a wedge-like pattern maybe. Therefore, that suggests a start of a new trend following the breakout. Okay. Preceding price action, again, that kind of leads into that. What's the price action before the breakout? How many times has the area been hit? Are we having a wedge-like pattern? Are we having signs of strong selling, strong buying leading into the area? Have we had some false breakouts on the other side? Things like that we were looking at, all to reach the conclusion of, is this going to be the start of a new trend? Is this going to be a strong trend continuation, or is this just going to be a breakout to an FLR, FLS, and take your profit and move on? Okay. And getting good at spotting where to exit, or in terms of how far to target, comes with a lot of back testing in terms of due diligence, going over your charts, looking at plenty of different scenarios, different examples, and seeing how price tends to move. Okay, and I'm going to go over some variety of examples in a moment that illustrate some of these points. And lastly, what we want to look at also is how key is the area that's being broken. Obviously, we are trading the daily time frame, and daily time frame is looked at by multiple market participants, multiple different classes of market participants. Okay, so if we have a very clear SR, which, for example, is a breakout of a range, then that suggests we might be leading to a new trend. Breaks of key SR areas are seen by multiple people, okay, and the more important the SR in terms of trend continuation or breaking out of a range to start a new trend, the more likely we are to have a bigger move. Okay, so using things like that can help us in terms of trade management and how far we can look to get runners. We can also get some very big risk reward relative to lower time frames, because we are using those lower time frames to our advantage based on a high time frame setup, and that is the big advantage of using lower time frames. Now, technically the FLI FLS can be the breakout bar low high. Now, obviously we're not looking for that. We are looking for trend continuation or the start of a trend, a bigger move than just the breakout bar low high. But we have to be wary that might be the FLR FLS, because we obviously have supply and demand that cause the price to retrace back to the scene of the breakout. So we have to look at that sometimes and just look at how price came back on that retrace and conclude whether there was new supply demand created there. Now, most of the time that won't be the case. As I said, most of the time looking for bigger targets, and especially when you consider the other factors I've just mentioned, and you consider the setup as a whole. If I have a strong breakout of a range or good location history, I'm not going to be targeting the breakout bar high low. But what I will do at times, if the setup isn't so strong, I might zoom in, say H4, H1, and look at how price left that area, how it retraced. Did it create a new supply demand zone? And I might be aware if that's the case, but that is a low percent of the time that will happen. I'll be doing that. Most of the time I'm looking for a bigger move. Okay. And when it comes to targets as well, obviously we're looking at daily time frame, but I'm going to look in. You can use the lower time frames like H4, H1 to pinpoint the exact decision points within the SRs you're targeting, just like you're doing it for finding your entry and stop loss on the actual trade itself. When it comes to targets, you can do the same thing. A wide daily zone, you want to zoom in and find those decision points so you can pinpoint exactly where to target. Okay, well that's pretty much it. It's much easier to explain it by going through a variety of examples from certainly a range of different types of pairs. So we'll go through that now. Okay, this is the US dollar versus the Singapore dollar, and this is daily time frame. Now we can see we've got an SR zone along here. See, we had resistance, breakout, support, and breakout. So it's got history, and we can see within this area here It also has, it's not particularly clear compared to this area to the right, but it still has a lot of daily this is daily time frame SR history there. So we can see we have the breakout, strong momentum, breakout, clears this whole area, which is what we want, and then we're looking to take it on the retest. Now first of all, in terms of targets, obviously we're using the daily time frame to find our targets. We see we have demand down here as a potential FLS, and then we have demand down here, which is where price hit before reverse, and you can see the decision point which will be caused by this daily bar low, which I would be investigating on the lower time frames to pinpoint the exact source of demand within here as a target. But this would be my FLS on the daily time frame. That's if I'm looking for a bigger move beyond the demand that led to price coming back. Okay, the FLS is strictly speaking the demand that led to price come back and have that retrace, but obviously the point of the retest, the daily retest, is we're trying to look for trends and for strong momentum breakouts which have a good chance of having follow through, and therefore this area and then this area would be my two targets. So I'm going to zoom in now. If I zoom into M15, this red line represents the daily close. Okay, so straight away we can see the source of supply. Okay, we've got the source of supply here, which led to the actual breakout, and we can see the strong momentum with which price moved down and broke out that area. And then we've got demand here. You see price testing it with these two lows here, which means we have this whole demand zone. Those are the two decision points that help to mark up this demand zone. So that's demand, which could become supply on the retest, which is what it does. Okay, so a worst case scenario, the stop loss has to go above this high. The best case scenario is going to go above this former demand turn supply, as this is the first potential area that should hold price, and this is the last. Okay, so your maximum stop loss is going to be this distance. Would help if I use an arrow. It's going to be that distance. Okay, now which one of these to choose? It's not easy. Price could easily do this and hold this, so this will be a wick on the daily time frame, or it could do what it did. Okay, that's when to a degree personal preference comes into play, but what I'm looking for is, can I identify the source of supply and demand that led to the breakout? Okay, how clear is it on the lower time frames? I'm using the same concepts I use in the classical intraday first time back. Okay, so this one is clearly a clear source, and that one is stronger than this area down here. And we do have to bear in mind, and this is M15, but we're trading a daily time frame trade, so it is quite plausible that price might do that and still be a successful trade. But that's where we also come back to thinking in terms of expectancy. If I did this trade 100 times, what would make me the most profit in terms of what stop loss placement? That's the kind of mindset we should be having, whereas most people will be thinking, well, I'll post it up here because that's gives it much more room for price to work out, and therefore it's a higher probability trade. Well, no, you might get a higher win rate, a slightly higher win rate if you place your stop up here relative to down there. But it doesn't mean you're going to get high long-term profit, because obviously your risk reward is reduced. Okay, so I will judge it on the pair itself. Okay, this is US dollar, Singapore dollar, so obviously it's a relatively illiquid pair. Okay, and I will judge it on the clarity of the lower time frame I'm looking at. I will look at multiple lower time frames. Obviously for an illiquid pair, I'm not going to look at M1. I generally wouldn't look at M1 anyway, because M1 to daily is going to provide me with there's too much differential between those two time frames. I might use it to pinpoint the exact decision points, but in terms of actually finding the sources of supply and demand that led to the breakout of that daily SR it's going to be around sort of M5, M15, M30. Okay, so it's this whole area I'm looking at. Whether I decide to put my stop loss above either of these ones depends on the clarity of these two areas, the pair itself in terms of the liquidity of it, and thus volatility of it. Okay, so there's no wrong or right approach, but we just have to have those types of considerations in play. But never think in terms of, oh, this one's nicer because it's gonna give me a higher win rate. That's the wrong mindset approach to have when trading. Okay, so we can see price did hit this one, and this is what held, and then this, if we zoom out slightly, this is H1 now. So these are the two daily targets, and obviously I'd be looking to refine these. Again, I'd be using the same concept. So I'd be zooming to the left, and I'll be trying to pinpoint these daily zones to a high degree of accuracy. That's all using lower time frames is finding those decision points, finding those pockets of supply and demand, and pinpointing zones. Okay, I'm not going to do it on these ones because it's more about that's an exercise that people can easily do. It's following the same process we do with FTBs and the same process we do with entries, but I'm concentrating more on finding the actual entry. Okay. Okay, next example is dollar SEK. This one's much clearer than the last one. I think everyone would agree on that, and visually, in terms of, you can easily see we have this SR along here, breakout, support, strong momentum, breakout again. So that suggests to me I want to be looking for a bigger move than just the bar low, or the demand within the bar low that led to the retracement. Okay, nice clear trend coming down. It's like a wedge pattern, so we have that strong momentum bar, the strong rejection, strong selling bar, so we expect that to continue. So now I'm going to, okay, once again we've got the daily close, and you can see that this is M5, this is the only supply, this base drop, that caused a breakout. Now obviously the actual move started up here, so again this is the source of the move, this whole area around here, and this is the DBD, the drop base drop, actually led to the actual breakout itself. Okay, so stop loss is either going to be placed up here, that's a maximum stop loss I'm going to have, or it's going to be placed above this zone. And this zone is not, as a DBD zone, it's not overly clear. It's not a great consolidation zone, it's not a zone with a lot of substance. So I would be more cautious relative to, say, the last example we looked at. This one is one I would be more cautious. I still want to try and play this area, and I would also be looking, we've also got form of demand there, and you can see we've had price broke it, came down, retested it, then came down again, and that's what formed the DBD. So that, if I didn't want to place my stop loss above the higher start of the move, placing it above this area, i.e. above here, would allow for a bit of follow through, in terms of it allows for the fact that the DBD itself isn't that clear, so it provides another layer of supply, okay, for price to react at. Because I don't really want to be placing my stop loss above it, because I don't expect it to do that on the balance of probabilities. Now there are times, as I said before, that it will do that, okay, but I want to be trading what gives me the highest net profit over the long term, and that isn't it. Okay, that gives me the highest win rate, but it won't give me the highest expectancy. Okay, so now if we look at H4, we can see exactly what price did, the retrace, and then this is the daily zone that I'd marked up as a potential first target. So we scroll back to the daily, you can see there's just going to be a decision point at the edge of this zone, and also this was the demand that led to the move up. Okay, this is Aussie CAD on the daily time frame again. Right, so we have, this one is not as good a setup as some of the previous ones. It's not as clear, but we can see we have support, resistance, and a significant swing high on the pullback. We have another swing high there, we consolidate, and then we have the breakout. Now it's not a high momentum breakout in terms of, if you look at that bar itself, it's not exactly strong buying relative to some of the other examples we've looked at. So that doesn't suggest to me we're going to have a massive continuation, because the momentum behind the breakout isn't particularly strong. And you see it just about clears the previous high. So in terms of targets, again, it's not particularly clear. I would look at that. You can see we've got resistance along here. Higher up, there's obviously this area which the price doesn't reach. And then within here, you can see you've got supply demand flip along there, and price pauses along here, so and gaps down. So there's a little flip, and you can see we've got history there. So there's lots of kind of little places. So what I would do is it's not overly clear on daily, so I'd be looking at H4, maybe H1 at most, just to see if I can see these kind of zones in a clearer light on the lower time frames. Remember, a lower time frame might reveal information not present on a higher time frame. So scrolling down to H4, this is the breakout area. We can see the supply zone within here now much clearer. You can see we've got a supply zone within here. You can see that area down there. So if you were trading this time frame, you can see these would be your two targets. So if I just remark them up slightly. Okay. So you can see this area was that lower one, which is where price hit. And this would be your FLR, but you can't really see it much. It doesn't tell you much on the daily, but on the H4 it's very clear. Okay, I'm going to go to M15 to look at that, but just looking around the time frames you're trading can reveal information that shows you something that you can't really see on the daily, because you can't really pick a target based on this time frame apart from up here. But that, as I said, the weak momentum behind the breakout doesn't suggest we're going to have a very strong move up relative to some of the other previous setups which did have strong momentum. Okay, so if I now zoom in to find my entry and stop loss. Okay, so this is the daily bar close. Now we can see we've got demand here, which led to the breakout, and then we've got a lower demand here, and then in fact we've got even lower demand down here. Now this isn't as clear in terms of no real high momentum breakout, and that lends itself to the fact that obviously the daily bar wasn't a high momentum bar. Okay, so we've got stacked demand down here. Now the lowest area I'm going to place my stop loss is clearly going to be below here. Okay, got stacked demand. This is the lowest area. Below any lower, and there's a much lower chance that price will react. Okay, more likely that it will just continue down. It will be a false breakout. Okay, so we can see what happened. Price came back and it hit the first layer of demand, and it hit the source of the second one. So my stop loss would probably be below the second one with a little bit of a buffer. I don't expect it to hit all three most of the time. There is stacked demand there, so the first one isn't, the decision point, the SR that defines the edge, this daily SR, is very clear, but the breakout itself isn't particularly strong, so I'd be a bit more cautious because of that. If you compare this to some of the previous example, we had that strong momentum move. This one obviously clearly isn't as clear, so therefore I want to be a bit more cautious. Okay, and you can see price left this demand hasn't been tested yet, and this one's probably just a bit too far for me. I don't expect price to have deep retracements when taking these types of trades. It does happen, and it does happen and work out, but as I said before, I want to be thinking in terms of expectancy and not win rate. And obviously this is the whole zone that we marked up on H4 that price hit as a target. Okay, this is pound Swiss franc. Again, we can see we've got SR history along here, quite a choppy pair in the best of times, and then we have the breakout. Now again, it's not a very strong momentum breakout, so that tells me not to necessarily look for a very big move. You can see this area has been hit multiple times now, so normally we've got a lot of pressure on a support area like that, I'd be expecting a very strong momentum breakout. And the fact it hasn't tells me that the strength behind the breakout isn't particularly strong, and therefore I'm not going to be looking for a big runner on this. And we can see the FLS is clearly, you can see this is clear support. So it's clearly going to be along here. We can see that's exactly what price hit. Okay, so this is the breakout bar, and I'm looking to enter on the retest. So if I now zoom in, so this is M15, obviously the daily close again. Now again, this one stands out in terms of the momentum which price broke out was clear. It wasn't on the daily time frame, but it is on this time frame and where it left from. That's as nice as a supply zone as you're going to get. Okay, now we've also got this ignored demand here, but we've already had to test this once before the daily close. Okay, this would be better if it hadn't been tested already. This is just a normal FTB setup, but with obviously not much space there in terms of the arc-like return, but it's the same type of principle. It's the ignored demand coming back and holding the supply. And this one, it wasn't like I think the euro, the US dollar, Singapore dollar one, where the supply zone was, the source was up here, and we had a clear drop down here. This one is essentially stacked supply. It's very close to each other. It's not, in terms of a volatility perspective on the daily time frame, it's not up here somewhere. It's not too high where you're thinking it shouldn't really reach that high. This is clearly the most obvious demand in the near vicinity that led to the breakout. There's nothing above here. Price is never going to hit up here and still work out on the daily time frame. It's unlikely to, put it that way. The chances of that occurring are very low, much lower. So I am going to be using this area as my stop loss. Now my entry is always going to be at the daily SR, okay, not up here, just to make that clear, because the daily SR is still the first place where price could find supply and demand, but I'm just really using these lower time frames to pinpoint the zone that led to it, and therefore I can use that as my stop loss, because I know where I'm likely to be wrong, because I know if price breaches this area here, it's more likely to do that on the daily time frame. Now it might find, for example, this supply to the left, it might find that supply, hit that, work out, hit that, react off there, not react, you know, it's going to most likely hit this as demand, it's going to act as demand, but it might work its way through all that, and by the daily close it might have come back down again. But obviously the chances of that hype happening are much lower than it just doing that. And everything we're doing is from a probability perspective, okay? So this is where going to be my stop loss is going to be above, my entry is going to be just below the daily SR, and you can see the decision point that defines it here. It's very clear. And obviously, in terms of the target, we marked that, didn't we, on the daily time frame. If I zoom out to H1, you can see what price did. It hit the supply, which is clear on H1, and moved down to the daily, that daily target in terms of the support that was hit. You can see that if we zoom out and zoom in, the support area on the daily time frame, and that's the FLS there. Okay, this is Euro New Zealand dollar, clear SR. We have the breakout again. It doesn't stand out in terms of an extremely high momentum breakout. Not a massive bar that suggests strong selling. FLS, you can see we've got the demand down here, and we can see we've got the decision points within here and then along there, and again I'd be zooming into H4 to try and pinpoint that in a bit more detail, but we can see that's actually what price hit, but it's pretty obvious that that's going to be your most logical FLS. Now this is M30. Now this one is great in terms of this is just a normal FTB setup, but with the daily close is obviously the confluence, daily SR even. This is M30, we see DBD space between the first arc and the return, so I would be looking at this on the M30 and potentially looking to trade this as well. The fact it's a daily retest obviously gives me gives me confidence in terms of I'm not going to use the M30 to actually, in terms of a target, I'm going to use that daily SR, that daily demand zone down here as the overall target. So I would analyse this pretty much in the same way as I would a normal FTB. Okay, so it's your New Zealand dollar, and you can see I'm not going to try and find decision points within here because it's going to get very messy. This is M30 and it's already a little bit messy, so my stop loss is just going to go above there. This is very clear, it's just a normal FTB. I'm going to trade it in the normal way. Okay, so I hope that makes sense. We have the strong momentum breakout, it's a normal FTB. I'm going to trade it in the normal way. I trade an FTB, so stop loss just above the high of that zone on this case because I'm not going to zoom in. It'd be too messy to try and find decision points, and this is quite a narrow zone anyway, considering we're actually trading the daily time frame. You see, works out perfectly, and also we can see the value in that in terms of the risk reward. Okay, next one is Euro Aussie dollar. Again, this is not the clearest SR you can ever see, but you can see it's a clear area where price stalled on the way back down. In terms we had the breakout, retest, went down. We've got the U-shaped curve, and we're coming back up again. Again, we stalled it on the way up, so it is a clear SR flip. Now you can see it's not, in terms of pinpointing it, we've got the highs here and we've got the close there. So again, I'm going to zoom in and I'm going to try and find that source. That tells you where that SR actually is. We're not looking to say the SRs are highs, the SRs are close. It's all dictated by the actual source of demand that led to the breakout. That tells us where the SR is situated, not the average between two extremes, etc., or any mechanical way of looking at it. Okay, and we can see the breakout itself. We've had the strong buying into it. It's a half decent momentum. Again, it's not the best, not the worst we've ever seen over the examples we've looked at, but it's above these highs. In terms of a target, you can see if I zoom out a bit, there isn't anything really obvious that stands out until you get up to this supply up here. This is a supply, and there's nothing really stands out. You can see we've got some wicks within here, and actually that's where price pauses. So if I was trading this, I'd look at that zone on the H4 to see if it's clearer, but you can see any trade we take here is going to have great value in terms of risk reward. And if I do zoom in, we can see on H4 we see a supply zone within here. If I mark that up, and then we've got the higher one up here. So you can see, using H4, these are the two H4 zones, and obviously this is the much clearer one on daily, but this is the one where I'd be paying attention to, and I've been looking obviously to tighten my stop loss, reducing my exposure, which could be tightening my stop loss or taking some profit when we reach this area here, or watching price action around it. But this would be obviously the ultimate target, because it's the first clear supply zone you can see. And this is, if you look at this, we can see clearly, apart from this zone down here, so you've got this one down here, these are the two key areas that price has to break to continue the uptrend. We've had the strong downtrend, we're having that U-shape occurring. Price breaks this, it's a major decision made in terms of a major area broken, and then this is the second area. Price continue with this uptrend, and then this is a major decision point. Okay, it's a line in the sand whether the uptrend continues or we have another continuation of the downtrend, isn't it? So I would bear that in mind as well when assessing your targets. If we go down to M15, obviously this is the daily close, so we're looking for price to come back. Now you can see here, we've got multiple supply zones within here, but there's nothing on the way out up. We can straight away say the initial source was down there, so that's the lowest point my stop loss is going to be placed below. But we've got multiple supply zones that price had to overcome to actually have the breakout itself. Obviously, ignore the arrow. Obviously, a major one there. We've got these supply zone. So this is kind of the key supply that price had to break in order to have a breakout of that daily SR area. Okay, so this is what defines where the daily SR is, because these are the supply that you expect to hold as demand on the retest. So price to do that. Now obviously it's not pinpointing because we haven't got an RBR to tell us exactly where that is, but I know it's not as low as down here. I know it's not this area down here. So I'll be using all three of these and placing my stop loss, giving a little bit of a buffer, don't get too greedy, but around down there, I'd say, below these three supply, giving a bit of a buffer. I would actually zoom in a bit more. So if I zoom in to M5, you can see the most recent price action. We have this supply here, which was tested and consumed, but we can see we had the retest here, along here. It's a bit messy, so my stop loss is going to be placed, that's what I'm going to use to pinpoint my stop loss. It's going to be placed below that area. And then we can see that price held this area very nicely. And again, because this defines the SR, my entry is going to be placed above this area with a buffer plus spread, obviously, because that's the first place price could react at. Okay, because these three supply zones define the daily SR. This is dollar CAD, getting towards the more liquid pairs now. Again, dollar CAD is a choppy pair, but we've got a very clear range there, and we've had the breakout of it. We've broken above all these highs. This is a long-standing resistance. We can't pinpoint on this time frame the SR that accurately in terms of I've put the highs close there, and then the most recent highs within here, and here. If I zoom in a bit so you can see it a bit clearer, these highs within here, and this one looks a bit more of an outlier, but you can see we've had a decent strength bar that's closed above all of these, and you probably foresee that coming considering the number of tests we've had of this area. Now it's a very choppy area. You've got multiple areas in here that price could react at. Now the standout one, obviously quite far away, is obviously this supply on here which hasn't been fully tested yet. So you'd probably include that as having a reaction. You'd have to zoom in and pinpoint that, and you can see, if I draw that again, this looks like it's a reaction to this area because you've got obviously these wicks down there. So I pinpoint that as the first decision point, and you can see price comes up there. These areas here, it's just too hard to tell. I would be looking at this and say this is a very well defined range which has been going on for since January to April 2012. This is so a multiple months, and once we have a breakout of it, I expect a decent breakout. I'm not expecting price to come back and have a false breakout of it. It is, then I'd happily take a loss because that's not what I'm going to be looking for when a long-standing range is broken. That's a major, I said on the previous example about major decisions made in terms of trend decisions. This is a major decision. Breaking this key SR that's been long standing over multiple months suggests that buyers are now in control, and we're going to start a new continuation of the most recent uptrend. Okay, so within here there's nothing that stands out in terms of untested supply or untested resistance. It's very choppy, but whenever it's been moving down, it's been retesting the whole time. So this is the only area that stands out in terms of potential untested fresh supply. So now if I zoom in, so firstly if I zoom into H1, we can see how the SR is defined. We've clearly got multiple supply along here, and this is the daily close when we break above it for further move up. And again, this is more like a traditional FTB setup. Okay, this is not a very concise area for traditional FTB, but you can see this whole area is what should hold on any retest. This whole area within here is what should hold, not down here or down there, or any daily bar low, or any mechanical way of determining your stop loss. So once again we can see the source, the overall source is here, but it's really, I'll be looking at these areas along here. It's holding, therefore on this time frame I would say my stop loss will be going below there, but I'm going to zoom in and pinpoint this in greater detail. Okay, so if I look into M15, we can see it even clearer now. We can see we've got stacked demand within here, so my stop loss is just going to be placed below that area. It's pretty clear. I don't expect the price to do that worse. It could do that, but it's obviously less likely. In terms of entry, this one's not quite as simple. Obviously got these highs to the left. Looking at the most recent price action, you can see we had the high that was breached when we retested it. So really I'd be looking at placing my stop loss within this area. My entry. I'd be looking at that, and I'd be placing my stop loss above this high within here and then below there. And obviously we've got a very high target on this one, so the risk reward is also very great. Okay, last example now. Aussie dollar versus US dollar. See, we've got a daily SR here, and we've had the breakout. Again, it's not overly strong breakout, but it's obviously cleared all the demand within these wick lows. And in terms of a target, in terms of the FLS, this is clear, very clear support and a very clear demand zone. So this is where I would be targeting within there. Just a quick momentum move down essentially. Now if we look down to M15, obviously this is the daily close. You can see that we have the immediate supply that causes the breakout. Then we have former demand, and then we also have the actual source. So this is the highest place my stop loss is going to be placed. The start of the move, this is ignored demand and supply. So you can see here where we have the retest, then we have new demand, new supply created here, and this is obviously what causes the high momentum breakout of the actual daily area. So this is what's going to be used for my entry, because this is obviously the first supply of that price could test on the way back, and this is what defines the SR. This is going to be my high stop loss placement, but this is obviously dollar. I'm going to be more aggressive with my stop loss placement on more liquid pairs. I'm looking at this and saying we've got supply here untested, we've got demand and supply up here, so we've got stack supply. So my stop loss is more likely to be placed around here, i.e. above this area. Now you could obviously place it above there, as I've said, but for me I'm going to place it down there. Now you can see what happens. That price actually tests it, comes away, breaks the previous low, but then comes back. We essentially have a false breakout on the lower time frames of this area. Comes back again, and then tests it, and then it drops. Okay. Now I'm not going to be watching M15 when I'm taking this trade. Okay, I'm going to be using it for my entry and stop loss, but that is it. I'm trading on the daily time frame. I'm not going to micromanage it. It's set and forget for me. I'm looking at it, I'll glance at it on H4 during the day, but it's a daily time frame strategy. Okay, I'm not going to be looking at it during the day so much until it gets close to my target or something happens that means I want to watch it. So the fact it does this and this, and it comes back multiple times, isn't going to bother me, because I'm not going to be watching. I'm going to try and let it play out. Okay, you got to have patience with your trades when you're taking a daily time frame trade, because they're not just going to shoot down like, you know, false breakout or traditional FTB in terms of the intraday setups. They're going to take a while to play out. Okay, but still not a long period relative to, obviously we are trading the daily time frame, so within 1, 2, 3 days we're looking for FLR, FLS to be hit depending on how far away it is. Now also we have some news here, because that isn't a normal based move, as you can see by the preceding price action, and this obviously comes very close to our stop loss. But in effect our stop loss, if it was above here, was actually very efficient, because it was the tightest possible stop loss before I had that line join earlier, which I've deleted now, our target down here. Okay, so that concludes a good number of examples to show the process I go through in terms of finding that supply and demand that defines the SR in terms of where price break out of. We can also define the source of the initial move, and that can be used for a stop loss placement. I generally don't unless it's very close or it's a less liquid pair. And then we're looking for the breakout strength itself to define where we want to target. But we're always looking at a daily time frame or around the daily time frame to find our targets. Okay.